Let's just take a look at how the market performed last week, Friday. Just a quick recap of Friday's trade.
Good morning, Samantha. Thank you for having me on today. We've actually seen a kind of bearish trend over the past few weeks. Last week and the other week before, we had a continuous decline on the 20-share index, shedding between 20 to even 50 points each day. I had put my support levels at 3,500 points, and I'm glad it has not yet reached that point, considering the trends. And perhaps what may be a contributing factor is the British American insurance company IPO, which is underway, which has kind of shed more attention to the market. People are moving back, people are liquidating some stocks, and people are also taking positions on some of the discounted stocks. We also had the introduction of Transcentury, which has also brought more activity on the bourse, and I think looking ahead, we may see some increased activity with the half-year results. Most banks.
Let's move on to those banking results that we expected to start spilling through this morning. Equity Bank, the first major financier, coming out with its second quarter results today. It reported 81% growth in earnings per share in the first quarter, and if it's able to keep this momentum going in earnings growth, it will become Kenya's most profitable bank. What is your outlook for second quarter results?
I think they'll still be quite good, and the market has braved the hard economic times. At a time where inflation is high, the banks have been forced to adjust their lending rates upward. All the same, we still have the banks in the business of making a lot of money because they still get a lot of money from forex trading, which has been volatile in the past few weeks. Looking at equity in particular, they've had a lot of organic growth. They have been doing a lot of investments. They have been doing a lot of bonds trading. Right now, the bonds are trading at high rates because the government is looking for deficit financing to bridge the budget deficit. So I think for the banks, we still have a lot of good returns in coming weeks and coming months.
Let's take a look at drilling into those expected results. When we look at the personal loans growth side, this accounts for the bulk of loans to the private sector. What are your expectations for loans growth for equity in particular?
I think that will go down as we progress towards the end of the year because, for one, the rates have gone up. Interest rates have gone up. We have an industry average of about 14 to 16% on such loans. And with the inflation at where it's at right now, it may be unlikely for them to get most of their revenue stream from loans. I think what they may look into is maybe other forms of non-funded income, perhaps continue with the forex trading, and maybe government securities.
And on the default side of the economy, as you say, with interest rates sitting at around 15% from around 14% at the beginning of the year, could we see an increase in non-performing loans?
Yes, that is expected. And well, again, we have the credit reference bureaus which are meant to curb against such things. We also have we have the banks require a comprehensive credit history before issuing any loans. And in form of defaults, I don't think it will affect the core business of the bank.
Let's take a look. KCB is also expected to report results out tomorrow. First quarter came in disappointing 0.2% earnings per share growth, and indicating that capital raise last year hasn't been deployed as yet. Do you expect us to see the effects of the capital raising initiatives that they've had start spilling over into quarter two results?
I don't think so. I think it would be too early to have that effect. The results are still going to mirror what they have been doing over the past 6 months, and I think it will be a good show. Looking at also the shareholder value to be drawn from the stocks that are trading in the market, we have it at a dividend yield of about 5.2%, which is really high. It's trading actually at a premium, I may say, considering they had a rights issue less than a year ago, which was issued at 17 shillings. So looking on for KCB, I think there's still a lot of prospects we are yet to see, a lot of room for growth.
Very quickly, Robert, we've got equity trading at 22.50. It's sitting at a 52-week closing low, and KCB sitting at 22.75. Of the two stocks, would you be buying into them?
I would probably go with KCB. I'm a bit risk averse when it comes to the banks, but I would rather go with it based on price progressions in the past and based on what I expect them to be doing in future.